I'm going to walk everyone through InvestCAN. Basically, it's a tool I built to help you build a portfolio throughout your entire life. Basically, what we're trying to do with our money is create an income stream, in retirement so we can pay ourselves and don't have to work anymore. And that's what pensions used to do. So now that we're in control of our money for the most part, there's not a lot of pensions out there these days. We have to create our own, and this is what the calculator is guiding you through. If you were to give it a technical term, technically this is a target date DIY Robo-Advisor. So basically, like what this chart is kind of doing and what the app's doing behind the scenes for you, like as you're working, making money slowly but surely, hopefully more year by year, you're saving money, and this is compounding. You're going to hit your end goal. And as you retire, we have to create an income stream. This is normally about 70% of what you had when you were working. And as you pull money out, we're going to slowly try to drain your money to zero. This is basically how you pay the least amount of income tax. But how this all works is you have to invest your money. So this is the green line, basically your risk tolerance. When you're younger, you have time to recover, especially if there's a large downturn, so you can have a riskier portfolio. Like a very common portfolio asset mix is a 90-10 split, 90% stocks, 10% bonds. And then as you get into retirement, you really want to de-risk your money because of a sequence of returns risk. Like you can lose too much money too quickly and ruin your retirement. So this is why a lot of people gravitate to around a 60-40 at retirement or throughout their entire retirement. And then there's a 25-75 asset mix. This is from The Intelligent Investor. This is the Benjamin Graham asset mix. He said you shouldn't be more than 25% bonds. So, on your deathbed, your risk tolerance should probably be around 25-75. Alright, so let's get to the app. So when you open it, just make sure you're using the right month's edition. Basically, it updates the asset allocation every month. It only moves like fractions of a percent every time, but basically if you want to rebalance your money every month, go ahead. Now, I would say the best general rule for every person investing, probably rebalance your money every 6 months and withdraw your money every 6 months in retirement. Now, if you're dollar cost averaging, you can also use this tool if you're putting in new money every month, and I'll just walk through all of that in a bit. Alright, so this little first bubble is called a tip. Basically, I can put these anywhere in the app just to make the user experience a little easier, more friendly when you first start using the app. So if you ever get stuck, send me an email and we'll build a new tip for every user. But basically, it's just helping you find features as well. So the best ETFs, basically, they're all here on the left-hand side. This is more for the DIY investor. Basically, I made this tool originally for beginners, but once people found out they could get their hands on an app, and I'll make whatever the best app they want, this was a feature. So basically, it's giving you the best 15-year, 10-year, 5-year, 3-year, and 1 year. Now, they don't repeat. So for example, ZID also has the best 5-year, 3-year, and 1 year. But it's always going to give you the next best, but it's always trying to find the best 15-year first. Hope that made sense. So you can click any of these buttons. So basically, when you're just starting investing, let's say you're 20 years old, and we don't quite know when you want to retire, but the average person, let's say, is 65. And Financial Planning Canada likes to use a 95 number for their life expectancy. So you can change these to however you want. Basically, this is more customizable than your average target date fund because why? It's based on your specific life expectancy. If you're not going to live as long, you don't need to risk your money as much. So let's just say this person has $4,000 the first time they're saving money. So all we need to do now is click InvestCAN. And basically, it's going to calculate you a portfolio. So what this is saying here, just to check our work, is, okay, you have $4,000 invested. You should be 100% stocks and 0% bonds. This is because you're so young. If this money's for retirement, you're 40 years from retirement. Like, you gotta be 100% stocks. And basically, this is your asset allocation on the left. This is what the algorithm's always trying to find the safest way to grow your money. And then it pairs an ETF, which it thinks is the best ETF, to that allocation to help build your portfolio. So we're putting $577 in ZID, $664 in JPN, $1,167 in tech. You get the idea. Basically, it's just giving you a target to buy. Now, it's not telling you the amount of shares to buy. Why? So many people buy their portfolios differently. Some buy the exact dollar amount. Some round to the nearest 5 shares. Some round to the nearest 10 shares. Some people round to the nearest 100 shares if you have enough money. And that's really all it takes. Basically, financial advisors are using templates just like this, and financial institutions are making billions of dollars a year off of selling you a strategy just like this. Now, if you wanted to do a little extra research right off the bat, you can actually click these ticker symbols and they'll take you on this first page to Google. Google is great for quickly comparing, different funds. So we can quickly compare ZID and XID. This is BlackRock's, and you can see BMO's, the blue, was definitely a better option to invest in. This is why the algorithm is picking ZID instead of XID. All right, so let's say you bought this portfolio and we're looking a little bit into the future. So now this person, they're thinking, hey, I'm going to deposit $1,000 more into the account. Now this feature right here is the rebalancers. So let's just say you bought all those amounts, some amount of time ago, and some of the investments grew, some investments lost, but now you have $5,000, and for some odd reason, $1,000 ended up in each account. Now, I should quickly notice, when rebalancing your accounts, it's always going to give you the best ETFs just to give you a friendly reminder, hey, this one's in this asset class. These are the best. If you're seeing 2 right now, basically, I'll get to that. This is the MGN portfolio. All right, so before we click InvestCAN to see what we should do with our money, basically, let's go through it quickly again. So let's say they're 21 years old now, and they're still retiring at 65. Life expectancy at 95, depositing $1,000, and this is currently where their $5,000 is. What's the calculator going to do? Well, it's going to say, hey, you have $6,000 right now. You should still be 100% equities, and if you really want to make your portfolio perfect, you should sell a little bit of your India, you should buy some tech, some RUD, and ZLB is just fine. You're only $15 off. Now this is where you can start clicking some of the buttons in the app. Basically, clicking the pie chart, it will show you how your current portfolio is invested. Like, here's a quick little tip. So clicking into these, it says like, hey, we had $1,000 in each account, so this should be 20% Canadian equities, 20% emerging markets, 20% international, US. Basically, you're just going to slide that down when you get done. Now, there's also a feature to maybe help twist your arm when you should rebalance your account. So that's what this little bar chart is. It's a portfolio rebalancer. It's just saying, hey, we're probably a little underweight in tech here. So that's what the left side of the chart's underweight, the right side of the chart's overweight, and how close you are to the allocation it's giving you, that's your portfolio score. So we're pretty close right now. The portfolio is 80%. Maybe you want your portfolio more accurate than that. You can kind of see how these tips come slowly but surely to kind of teach you what each part of the app is. Now, at any point, you can override the InvestCAN algorithm. That's what this green line is. It's slowly pulling your risk tolerance down to make sure you don't run into a sequence of return risk. But also, these are 2 very popular portfolio mixes, a 90-10. If you want a 90-10 portfolio, just click 90-10. It will build you a 90-10. If you want a 60-40 portfolio, just click 60-40 and it will build you a 60-40 portfolio. But again, the whole kind of point about this app is helping you slowly pull the risk of your money, slowly but surely, instead of jumping risk tolerances like going from an 80-20 to a 60-40 overnight. Just, I don't know, how do you know when to do that? What's the right time? There really is no right answer. All right, so let's fast forward into the future. What do I do with $1 million? I'm just into retirement. I'm 67, think I'm gonna live to around 90 years old, and I have $1 million. Let's build a portfolio. Okay, so right now, $1 million at these ages is basically saying, hey, a 56-44% portfolio is probably a good risk tolerance for you. Now, just to show you a little bit how the algorithm works, if you think you're going to live till 95 it will risk your money a little bit longer. Why? Because you're going to live longer. You have less of a time horizon risk. So that's why it's saying, hey, you're going to live longer. We need to get a little more money out of your money. But again, if you want to stay at 60-40 your entire retirement, just click a 60-40 button. That's what advisors have been doing for decades. I mean, maybe some of them are a bit different, but that just seems to be the go-to. So you have $1 million and you're thinking to yourself, okay, I just cannot believe that 10 combinations of letters and 10 numbers that add up to 100 are literally going to beat my advisor. Like, I just need a little bit more diversification than this. Putting 100 grand in ZLB just seems crazy to me. So you're going to want to click the green button, and it's going to build you out a little bit more of a portfolio. So it's going to use emerging markets in India, Japan and international, some semiconductors, uranium and tech, the NASDAQ and a US dividend fund, Canadian staples and Canadian low volatility. Basically, it's just going to spread your money out a little better with the risk tolerance that you chose. Now, when you click on the green pie chart, it's going to show you kind of what math would build a portfolio. This is kind of what your template's going to look like. And you can click into each little item and say, okay, XST is going to take care of 4.47% of my portfolio. Like, you can make it as accurate as you want. You can buy to the nearest penny, or you can buy to the nearest share. It's whatever your comfort level is. Now, if you click the paper on the bottom left-hand corner, this brings you to the fun facts part of the app. These are basically the documents that I would have to give clients before I would buy investments for them. And basically, this is where we can put as many tips as you guys want. So this first tip is just telling you, hey, this is what a fun fact is, but I think I have about 20 tips or so typed out. And it's just giving you the ability to learn a little bit more about investing as time goes on. And these don't repeat. So once you go through them once, they will disappear. I might have to reset them here and there. But yeah, basically, if you want a little tip into the app, send me an email. Let me know. So the last button is the blue button. Basically, this is the app's brain. This is the AI. This is how the app's finding the tactical asset allocation. How to make your money as safe as possible. Basically, a 70-30 portfolio now is technically your safest asset allocation. Now, the last button I want to show everyone is basically the asset allocation button. If all of this is over your head and you just want to buy a one-fits-all product, basically I've gone through and found the best risk-adjusted return ETFs of all the different companies. And you're just going to want to click the asset allocation button here near the top.